most financial institutions are said to be seriously struggling. The good news, however, is that banks that are exposed to the mining sector are benefiting from the pandemic due to the fact that many investors are now moving towards gold investment. The accounting auditing firm KPMG has been assessing the impact of the COVID-19 on Ghana's banking sector, and senior manager at KPMG Ghana, Robert Jatto, joins me via Zoom. Thanks so much for your time this evening. All right, Robert, can we quantify the impact of COVID-19 on the banking sector?
Well, I think that it's early days yet. Of course, it's fair to say that whilst the general economy is being impacted, the banking sector will not be isolated. However, if we think about banking in terms of the number of digital means that a number of them have deployed, then we will expect that they'll continue to operate. If you refer to the Bank of Ghana sector report that was issued in March, you will see that fairly banks are still in good business. Fortunately, during the period, they were not closed down, but it's also the case that we need to remember that whilst they operate in this economy, if you look at the forecast that we are seeing in terms of GDP growth for Ghana broadly, they will also be impacted in some shape and form. So clearly, we expect that banks will continue to do well. If you look at COVID, the impact will be felt perhaps not from the capital point for banks, but more from the earning side of things.
Right. So the stock market has also been described as one that isn't efficient in the sense that it doesn't react to information. So shares stay flat, and some banking stocks have also declined in value in relation to COVID-19 impact. We will have to see more banks, or are we going to see more bank stocks tumble?
For us globally, if you look at what's happened in the stock markets, you will see more movements in the global markets than we've seen in Ghana. But clearly there has been some movement. We have looked at this from January to immediately before the announcement was made and then after the lockdown period. And we have seen some movement in some bank stocks. So we expected a bit more movement, but clearly we haven't seen a lot, except that some specific banks have seen some dips in their stock prices. But it's also the case that, remember, there may be a number of other factors other than just COVID. Banks are issuing their final reports or publish their financial year final reports. So that could also be feeding into the market in terms of the reactions that we've seen in prices.
Interesting. But banks with business exposure to certain sectors such as mining, which was indicated in your report, will make some gain, actually. Others with exposure to sectors badly hit, such as tourism, hospitality, education, may be badly affected, as we saw in that report that you put together. What should be their positioning here so that they are not badly impacted by COVID-19?
Well, I think that different players would suffer different consequences depending on which sector you choose to play in. If you think about the mining sector and maybe gold in particular, in crisis, people see gold as safe haven. And therefore, what we are saying is really not new. You will see that there's a shift towards that precious metal. And so perhaps banks that are exposed to that area may benefit. I'm using the word may benefit because there's also the risk of supply chain disruptions in those mining sectors, because they would also be impacted. So we may see movement in prices, but then also we need to bear in mind that the supply chain side of things need to be considered. In terms of what banks should do differently, in our view, it's important that banks take a step back and do some scenario planning. It's also important that they stress test their strategies at this material moment. And perhaps in a business where most people would want to do cost reduction, our advice would be to do it in a more sustainable way. So this is a time not to cut and just cut cost. You should be doing what we call sustainable value improvement and cost optimization. And I think that will be very critical going forward.
Right.
be even more critical is for banks to manage with their heart. And what I mean by that is they need to pay attention to employees and to their customers and be empathetic in terms of how they manage the safety of employees will be critical, safety of customers will be critical, and safety of the banks as well will be very essential at this time.
Okay, Robert, before I let go of you, some industry players have said that Bank of Ghana's measures have helped the sector. Should we expect more from the regulator? And when can we say that there is a sense of normalcy in the banking sector?
It's fair to say that the central bank has kind of done a lot of reforms, perhaps immediately or prior to the COVID hitting. So you find that sometime 2018, 2019.
Unfortunately, it looks like we've lost Robert. Robert Jato is a senior manager at KPMG, and we've been assessing the impact of COVID-19 on Ghana's banking sector.